Hello, I am Wael Yahya, Certified Financial Technician Expert from the International Federation of Technical Analysts. In this video, we will update our classical technical analysis short-term view for Marriott International. Let us expose the technical weakness underlying the chart. As usual, we will start with the major structure over the monthly chart. And we can see a full control for the sellers in June, and we are approaching the final third of the month, and we are now below and clearly below the monthly support around 150, 147, around the 147 area, increasing $3 up, $3 down according to volatility. So this area is considered a monthly support zone, and for the time being Marriott is performing well below the monthly support, and we are approaching the final third of the month. And if the month closed below 150, it is going to be a very bad signal, a negative signal, and it may forecast another bearish month if it really finally closed below 150 in June. Concerning these two candles over the monthly chart, we can consider this a hanging man, and this is another hanging man. So a close below the shadows of the hanging man Japanese candlestick is also bearish over the short term. So a lot of weakness is appearing on the monthly chart. Now let us check the weekly chart. We can see the weekly chart, the uptrend is broken, another bearish signal. The uptrend which we drew before and the channel line, this rising uptrend over the major term is broken and is not valid anymore. Why? As we can see here, the week before it is broken by a black full control sellers Japanese candle, and in this week it opened with a price gap downward and it continued the selling pressure, as we can see. So the uptrend over the weekly chart is over and not valid anymore, and we can see a lot of signs of weakness, of failure to reach the channel line took place before the break happened, and this is also very negative. This will be having very negative impact over the short and medium term. Finally, we can notice over the weekly chart that the trading volume was increasing during the selling pressure, and it increased significantly on the break after the downward gap. So volume is confirming the price action. Let us now take a look over the short-term details on the daily chart. Really, on the daily chart we can see the details of the break itself, and we will notice that we do have two price gaps on the downside, not just one. One of them, the second one, is on daily basis. This was the opening price gap on the weekly, but this one was midweek. And keep in mind that we are now closing 2 days below the monthly support around $150. In order to regain strength, which is not probable, but in order to gain it, even if it's of low probability, the stock needs to rise again above 150 on daily closing basis. and I think this is not easy. I think it's very difficult. Any correction to the upside, any move to the upside is also considered a short-term correction against a falling trend over the daily chart. Now let's draw this new short-term downtrend over Marriott. Here it goes. We are connecting lower highs and we are trying to connect lower lows wherever the second low may come. It already broke the previous low. So over the very short term, the stock is suffering from a downtrend. The support over the monthly chart is broken. The uptrend over the weekly chart is broken after failure to reach the channel line. We can notice increased volumes during the break and during the break on the weekly chart as well as the daily chart, and we notice that there is 2 days close below the monthly support. Of course, some volatility may take place later on, but for now it is a very bearish signal. Targets of this move may be ranging between 137 over the short term, but the nearest strong support is around $130, which is the nearest weekly support. So I think Marriott may even break much lower than this support, but it's too soon to talk about this scenario. Let's just focus on the short term, which is already bearish as long as it is below the monthly support at 150. Our short-term targets are 137 area and later on around the $130 zone, which is considered a long or medium term weekly horizontal support. So the tactics should be on the short selling side, and we will consider some virtual trading by going short in Marriott maybe tomorrow or after tomorrow. That's it. Please feel free to subscribe, like and share, and see you soon.